Okay, there they
What
go.
is it again?
Okay. Jose
where we
Meza?
could tell them how they could save money,
Right.
like plan for.
They didn't have any regulations against solar, just no one had done it. Thank you so much, man. That was awesome.
Thank you.
That's
That was
great.
good. That was
really
very. Hello, welcome back to CRE N More, where we offer you commercial news about commercial real estate and more. Today, we are featuring our trusted partners, Demarco Fletcher from King Solar Pro with Sunrun.
And Jose Meza with Meza CPA.
Yes. Can you introduce to us about yourself?
Sure. Thanks for having me today, guys. My name is Demarco Fletcher with King Solar Pros at Sunrun. I've been in the solar industry for about 5 years. I actually began it as a division to my real estate brokerage, simply because so many of my real estate clients were having poor solar experiences. So instead of complaining about it, my wife and I decided to do something about it. So we got licensed to do solar the right way, make sure that we explain solar very thoroughly to our clients so that they can determine if it's a good fit for them and they can make the best decision for themselves.
Excellent.
Yes.
Awesome.
And Jose, introduce yourself.
Yes, thank you. My name is Jose Meza. I'm a CPA. I've been in the industry for about 10 years, and I started my company about 3 years ago. I strive in helping business owners get from point A to point B. So whether it be forming a company and then all the way to point B, which is going to be actually filing the tax return. Well, there's a lot of steps in between, of course, a lot of important steps like tax planning, for example. So businesses and of course individuals that have complex situations like owning real estate, whether it be single family residence or commercial, that's pretty much what I help with.
Excellent.
Thank you. I would like to start off my question with Demarco.
Sure.
What inspired you to get into this industry and what you find most rewarding when you are helping your clients?
Well, like I stated before, we started this as an extension to our real estate brokerage about 5 years ago. What inspired us to do so, and I'm saying us, my wife and I, and our real estate team. What inspired us to do so, that we were getting a lot of complaints from our previous clients that had gone solar, but didn't really get a thorough explanation. And as a result, they were having very poor solar experiences. It kept happening, probably happened at least 10 times or more with past clients. So my wife and I decided at that time that we were no longer going to complain about it. We were going to do something about it. So we got licensed to become solar professionals. And it's been very rewarding, very similar to that of real estate. And the reason why I like it is because now we have the comfort of knowing that our clients, if they make a solar decision, they're doing so very informed and educated, so they can make the best informed and educated decision for themselves. So we get a lot of pride from that, making sure that people are very well educated.
Thank you. You did mention that it was very confusing. What was it like before, and how did you make it into?
Well, like I said, I've been in the real estate industry for over 25 years. And those of us who have been doing real estate for any time remember when solar first became popular back in the early 2010s, 10, 11, and 12. But because of how it was done then, it generally created a very difficult real estate transaction. There were liens. Title couldn't release liens. It was a disaster. And so it started getting better toward the last 6 or 7 years. But unfortunately, because there's no regulation in this industry until very recently, there are a lot of solar salespeople that were selling solar as opposed to properly consulting folks about solar. So as a result, a lot of people had poor experiences. We decided to be that, that team that was going to make sure that people were properly informed.
Got it. And on the same topic, I want to ask Jose about your experience and how you got inspired to become a CPA. And also, I want to help our real estate investors about, if they do install solar related, would they be able to do cost segregation and things like that and get some tax credit? Are you aware of any of this type of incentive that we can help them on their tax return to get deductions in?
Of course, yeah. So, in terms of why I started in the business, I just like numbers, At first, I was like, I like numbers. I like making money. I like businesses. So that's what took me into business administration. Then once I was there, I was like, okay, well, I'm going to go into accounting. I feel like it's a more well-rounded concentration you could go in. Then from there, I had a professor who all he did was tax, and I really got inspired by him and pretty much joined the tax concentration of accounting in general. So that's how I got started into tax. And then, of course, worked for a lot of companies. It's a lot of tax compliance,
Sure.
which is really important. You know, you got to make sure you're doing the tax return accurately and you're taking advantage of everything possible in between just being compliant. But that's just being compliant. You still want to work with making sure you're developing tax strategies.
That's right.
I feel like that's where a lot of CPAs fall short, that we're just too focused on tax preparation
and compliance.
And compliance. And we skip the part where let's provide other services for our clients where we could tell them how they could save money,
Right.
like plan for throughout the whole year.
Right.
So then when you file your taxes, you've already saved all that money because of the strategies that you implemented, right?
That's right.
So then going into how you're talking about commercial buildings and residential in terms of the cost segregation studies, you could always do those. What they're going to do is they're going to accelerate depreciation. So especially when you're talking about a commercial big building with a lot of money thrown into it, some of them are really expensive. If you wait, you're going to wait 39 years.
45,
yeah, it's a whole single family is 27 and a half, but commercial is even more.
Right.
So you're going to be dealing with having to wait for the depreciation to take course. Well, if you do a cost segregation, you're going to break up the different pieces that come with it, and you're going to be able to depreciate it in 5, 10, 15, 20 years.
Nice.
Be able to take bonus depreciation in some cases too, where you could depreciate it most of all in 1 year.
Excellent.
Now, there's still passive stuff that you deal with, but within that, yes, at some point they had taken away some of the solar credits, or they were beginning to start phasing out. But with the new bills that came into effect, where they're trying to push solar more to individuals and businesses alike,
Right.
when a lot of new solar credits came into effect, and even the one that was beginning to phase out went back up to 30%. I'm not sure when it starts phasing out again, but as of right now, I believe it's still 30%, right?
30% for 10 more years. Well, 10 years starting last year. So
that's one great strategy that you could use, especially if you're already going solar.
Yes.
Now you could take advantage of the credit, and then along with the cost segregation study, well, now you're starting to save more and more money on your tax return, that if someone didn't tell you, if you just went out and go buy a commercial building, nobody told you, like, hey, make sure to talk to your CPA about a cost segregation.
Yeah.
They might just depreciate it all over 39 years, and it's going to be a lot less and a lot longer before you get your money back.
That's right. So we're so happy that we have you both on our episode to talk about this.
Yes, actually, today's features is all about saving money, because a good CPA is worth every penny of his cost. You know, sometimes he may charge you $1,000, but you're saving tens of thousands of dollars every year.
Even more.
Yeah. And same as to solar. We're saving on electricity, we're saving on tax credits. So there's a lot of benefit. But I'm just wondering, what type of families or houses or commercial property is the most suitable for installing solars?
So we do solar of all kinds, both residential and commercial, but we'll stick primarily to residential. So the prime or premier type residential homeowner is your middle to upper middle class homeowner. Okay. People who have been having, utility bills continuing to go up, and there's a reason for that. One of the things we explain when we consult with clients about solar is what's taking place and what's happening right now in the state of California. If a person is considering putting solar panels on their roof, they really need to understand what's happening in the state, and more importantly, what's expected and projected to happen moving forward. So again, they can make informed decisions. So we like to let people know what's actually taking place, but the ideal client are generally middle class and upper middle class homeowners. They're the ones that get the best breaks.
I see. And what's the difference between for rent and for sale?
So solar traditionally, up until a year ago, but traditionally solar can only be acquired one of three ways. You either paid cash for it, you got a loan for it, or you leased or rented the panels. Now there's another program that has taken place this past year. It's only been in existence for about a year, but it's a program in conjunction with the utility company, whether it's Edison, PG&E, or SDG&E. And it's a utility replacement program. So That's generally the most common program because there's zero out of pocket ever. There's never any debt. There's never any liens, and there's never any liability to the homeowner. It's simply a utility replacement program, literally replacing the utility that you have now with solar utility at a much lower price and at a locked in rate. Plus, you now get backup batteries, okay? So that it ensures that your home will never, ever be without power, even if your surrounding area has a blackout.
Wow.
In addition to that, the batteries still allow you to create and generate credits throughout the year with the utility company. You get an automatic credit of at least $750 per battery. Then you can actually opt into additional programs so that you can use your actual storage battery that comes with your system now as a way of controlling your utility costs and lowering them. So there's several different options now. All of these options have become just recently available once the solar industry was regulated, and that took place last year in April of 2023.
If I didn't hear it wrong, we are not taking any loans. We don't have any liens. And when we sell the property, there's no payoff. They just transition.
This is just a transfer of utility, just the same as if you sold your house right now and you had Edison as your utility. If you sold your home, the new home buyer would still have Edison as your utility. So it's still the same exact way. There's no change. It's just a transfer, a one-page transfer of title done in escrow at no cost or no responsibility to the homeowner.
Wow.
Yeah.
I don't see anyone that doesn't qualify for this.
Well, here's the thing about this program. It's not the individual homeowner that qualifies, it's the property. So as a result, not every single property qualifies. So what we do is we do what's called a site survey. If a person wants to apply for this program, we do a site survey. It will determine if the home is a good candidate for this program. And if so, then all of these other advantages come into play.
So I have a question. I live in a condo community with about 80 families. Currently, we do not have solar, and we actually reached out to HOA about 4 or 5 years ago. Can we put solar? They did not say no, but there's no availability. How do we go about getting you guys to talk to the HOA to get this installed?
That's a great question, Simon, and that's actually one of the services that we provide when we're speaking to folks. So I'm doing a project literally right now in the city of Murrieta. It's a condo community. They didn't have any regulations against solar, just no one had done it. Just they assumed that you couldn't do it. One of the services that we do at no expense or hassle to the homeowner is we do that HOA thing for you. We get your HOA approval for you. Okay, that's part of the process, but the great majority of the time, just because you're in a condo situation and you have an HOA, they can't stop you from putting yourself in a better position to save money.
Sure.
Wow.
That's great.
Yeah.
I want to go to Jose a little bit. Actually, through our real estate career, I see a lot of homeowners who are saving through the primary residence tax deduction or sometimes 1031 exchange. Can you explain it to us about how a property owner can save on tax through various ways? What are your tips?
On real estate transactions.
So the first one you talked about, of course, is going to be the most common because a lot of people are going to be able to take advantage of. And that's when the property you're selling is one that you've lived in for 2 out of the last 5 years.
That's right.
If you qualify for that, then each taxpayer is going to get $250,000 reduced from the gain for a total of $500,000 for a married couple. So the way that helps is that if your property, even if it sells for $800K, because some people hear, okay, well, you say $500K, well, my property is worth $900K. Well, that's not necessarily the gain. You know, the gain is only what you bought it for versus what you sold it for. So if you bought it for $500K and you sell it for $800K in the future, then you're only dealing with the $300K capital gain. So then you're able to take advantage of that specific
tax code.
Tax code that the IRS allows for people who are selling their primary residence. So for, like I said, it's more common. Everybody lives in a home. Not everybody, but sometimes you have to move out for whatever reason. So that's why it got put into place. So people weren't just paying taxes left and right and being stuck in one place for not being able to pay taxes. Now that's for, of course, primary homeowners. Well, if you have a lot of real estate investors, in their situation, they cannot take advantage of this. So for them, what they have available is going to be the 1031 exchange, right? So with the 1031 exchange, what happens is that you could sell an investment property. It doesn't have to be like kind. So you can't sell an investment property and then go buy stock in Tesla or something like that, you know? What you could do though is sell an investment property and buy one for equal or greater value. So this is a great tool for investors that are looking to grow their portfolio. Maybe they're moving from a single family to a triplex or just a bigger home in general, or even to a commercial building or something like that. You're moving up in value is the point of this. So what happens there is that gain that we were talking about, let's say the $300,000, well, instead of it being taxable, it just gets deferred and carried over into the new property. So it's not necessarily tax-free, you're wiped and you don't have to pay anything. It's just that tax deferred. So potentially if you keep doing 1031 exchanges, or if the property you bought you never sold until you pass it to your kids, then you yourself are not going to pay any taxes on that. It's going to be deferred until you pass away, of course. And then there's more complex structures you could deal with later on if your net worth was more than a certain amount.
I know a lot of people who are like, basically our goal is all trying to grow the real estate portfolio for our clients and grow their either asset value or their rental income cash flow. And sometimes for the plan is often to start with one home that we call primary residence, and then sell every 2 to 5 years, to get that primary residence. Do we have to pay any tax if within that? Do we have to pay any tax or gain later on after we sell?
If you're selling your primary residence?
Yeah.
So that one's not like the 1031 exchange where the tax is deferred. That one's a straight up deduction and you start from
free money.
Yes, that's actually free money right there. Yeah.
So we take that gain as free money and then put that into a bigger down payment, and then to afford maybe start with a 500K home to 800 and then to 900 and then to 1 mil. Once it grows to a certain value, then we grow into multifamily, 2, 3, 4 units, live in one, collect rent from the other units while it's still a residential unit, and you can still take that benefit.
The advantage of that.
Yeah.
Yep.
If you are handy, you can go ahead and do some remodel work during the meantime to appreciate the value. Yes. And then once it grows to a certain level, if you have multiple properties, then we do one primary residence and multiple, the remaining in 1031 exchange to defer those taxes.
So I have a question for Jose. ADUs are very popular here in Southern California or California overall. Have you incurred where homeowners, they built an ADU, they sold the ADU unit by itself? That's straight capital gain, right?
I haven't incurred it myself, but once we start with the new laws that came into effect, and now you could actually split the two properties.
That's right.
What I imagine is going to happen in that scenario is that it's going to be the cost of building that ADU, in my opinion. But you're going to have to calculate a gain, and you are going to pay taxes on it. Yes. So I guess the hard part there is figuring out what that base is for that building specifically.
Building and the land, maybe.
Yeah, right? Because you bought the property all together.
That's right.
So now you have to split that in two. On top of that, you have to, which is a good thing. The more you could take into the basis, the better, the less the gain. But you're going to have to take into account all the construction costs and everything added together. That's an interesting one because, like I said, it hasn't always been where you could split it up.
That's right.
You have to sell it all together. But with the whole fact that we're a shortage in real estate, I think that's the reason why every county in California or the laws that they made it so that people could do that, because we want more real estate on the market so that prices drive down a little bit.
That's great. I mean, when we come across that, we'll have you share again.
100%, yeah.
Right.
Hey, Demarco, you were mentioning about the utility replacement program.
Yes.
And my clients often say, hey, what's the value in having the solar? How cheap do I get? What's my savings? If it was $200 SCE utility bill, if we go through by Sunrun, how much do they think they'll pay?
So great question. The way we approach the utility replacement program is we tell folks right up front, listen, you're not going to see a massive day one savings. This program people are doing this program because of for 3 reasons. Number one, rate control. They get to control their utility rate. Right now, whomever your utility provider is, your utility rates are going up every year, just like the price of gas, right? The second reason people do it is what's called monthly, cost predictability. You're going to have one levelized bill, every month. Okay. And so your savings is going to be a little bit up front, but your primary savings is going to be year after year after year when the utility companies' rates are going up every single year and your rate is stuck at the same like a mortgage. It doesn't move. Okay?
Pretty much you locked it in.
You're locked
with the
in. Okay. And that's the reason people do this program, because they're locking in their rate. It's rate protection.
Right.
Right now just in Chino Hills, the average Edison, utility rate now is between 36 and 42 cents a kilowatt. With this utility plan, you can literally lock in your rate at 25 cents a kilowatt, and it'll stay that way for 25 years.
Oh, wow.
And it doesn't have an escalation clause?
Well, the rate never changes.
Oh.
The payment has an escalation clause. Okay. So your payment will change 3.5% per year. Okay. But it's going to always be at far, far less than what the utility rates are going up every single year. Okay. Right now, utility costs are going up in the state of California, an average of 8.9%. That's only going to increase over the next 4 years due to the changes that all utility companies are making right now. Utility rates are expected to go up 40% over the next 4 years. Okay, so that's a lot, 3.5% escalator is a ton better than 40% over the next 4 years. So it really makes sense from a long-term perspective. But again, we would like to make sure folks are consulted with properly, educated and informed, so they can make the best decision for themselves.
And Jose, with that scenario, have you come across any tax return like that? I mean, lock it in the rate.
Yeah.
Is there any tax incentive going solar?
Yeah, I think so. Going solar, there's always going to be the tax incentive when you buy the property for yourself. You're going to get that 30% credit that we were talking about earlier.
Right.
So in that scenario, you do get the credit. In this scenario, it's going to be more about, like he said, locking in the rate of inflation, because we just don't know where California
Or any
utilities or
company.
any utilities is going with. I don't think they know how to administer what's going on with some people. So they're just either overloading the grid or whatever the case is. They're not being as efficient as they can, which is why. And then cost in general increase. World events cost electricity cost to go up.
Right.
So with that, it's going to be more about locking that in. It's going to be more beneficial, of course, for people that are not willing. People have been telling them go solar. They're not going to do it. They're not willing to make the investment up front, but they do want the savings. They want solar, but they don't want the hassle of owning it. Because the great thing about owning solar is the tax credits, it's yours. You still have to pay interest if you borrow to buy that. So that kind of sucks. But other than that, it's yours. The downside to that is that it's yours. So it's kind of like not everybody invests in real estate, because there's a lot of things that you have to account for.
That's right.
Like repairs and things like that.
Maintenance and all that.
Yeah. So I'm assuming it would be the same with solar. I mean,
100%.
a lot of things would be covered, but then a lot of things would not. Whereas with, I remember you telling me about this, where they pretty much cover everything.
Everything. For everything from A to Z for the next 25 years. The homeowner has zero liability.
Wow. So that means if a solar panel is not working efficiently, they'll come and replace it or fix it.
100%. They'll replace the solar panels, the inverters, the batteries, everything. Everything that we touch, we warranty and insure. Okay. A great point, just to extend on what Jose was sharing. If you purchase the solar panels, it's like buying a car. After your manufacturer warranty is gone, the panels are yours. So if a panel goes out in 10 years or an inverter goes out in 12 years, you're liable for it. If a battery, not if, but when a battery or a backup battery goes out, they're only manufactured to last about 10 to 12 years. So you're going to have to replace them. Right now, they're averaging between 12 and 15,000 a battery. Okay, so that would be your responsibility down the road. So that's the reason why most people now today, with this new utility program, the way we're getting utility today, choose to use this program as opposed to purchasing. However, if they choose to purchase anyway, they still can.
Yes.
There's no penalty for purchasing a system. You're still allowed to do that. It's just that now they require batteries, so the cost of these systems are going way, way up.
Sure.
Also, I want to add just really quickly, Jose made a great point earlier about the grid, and we don't know what's going to happen. We actually do know what's going to happen. The grid in the state of California is very, very old, it's inefficient, and it's very expensive to maintain.
Right.
That's the reason the utility company came to Sunrun. We did not go to the utility company. All the three major utility companies came to us and said, hey, help us to devise a program that's going to do two things. It's going to help the consumer, and it's going to alleviate pressure off of the oversaturated grid. Okay.
That's right.
And so it's a win-win for both if they're doing it this way. So this is how this program came into effect. And like I said, unfortunately, though, not every home qualifies. The home has to be in pretty good to good condition. The roof, the electrical have to be in good condition. And that's all determined right up front from a home site survey, again, at absolutely no cost to the homeowner.
Got it.
And we've been talking about homeowners as CRE and more. I would like to ask, does commercial qualify for this, Sunrun?
Yes, there is a commercial product. Sunrun doesn't do it yet. We actually we would sub it out, okay, to another company. Where Sunrun right now only does residential, but we're hearing in the next year we will be able to do it. You can do it today, but it's subbed out through one of our partners. But we are incorporating that commercial aspect to this program within the next 12 months is what we're hearing.
Wow, I'm very excited to look out for it.
Yeah.
Jose, I want to ask you a quick question. So your client includes business owners, real estate investors.
Yes.
Let's talk about business owner doesn't own their commercial building versus having a commercial building for their business. What is biggest difference? Is it depreciation or cost saving or tax deduction?
Kind of like renting versus
renting versus buying commercial.
I mean, here's the thing: if you know you're gonna stay in that commercial space, or your business needs a commercial space for the next how many years, to me it just doesn't make sense not to buy it, because if you're just renting it from someone else. I mean, at the end of the day, they're the ones getting the benefit of appreciation, the benefit of depreciation.
There you go.
Expense, and then the benefit of just paying that mortgage off little by little, right? So what you do is you just buy the commercial building. You could buy it yourself personally, put it in an LLC, and then rent it out to your business. So it would be the same scenario that you had before, where someone else had bought that building and rented out to your business. But now instead what you're doing is you're personally buying that building and your business is renting it from you. Now that doesn't mean your business is stuck there. It just means that now it's your commercial building and you could rent it to whoever you want. And you were even telling me even for office spaces, sometimes that makes sense, because you buy a whole building, but there's certain loans out there where you could just cut it in half, rent it to yourself, to your business, one side of it, and then the other side rent it out to other businesses.
So we do have experience where, for example, restaurant business owner, they own both a building and a business. When he or she retires, they rent it out to the new business owner. They collect rent. They don't have to run the business anymore. That's the first thing. Second of all, what Jose just mentioned, you could potentially buy a building, your business is in it, and we could put down as little as 10% to do SBA loan to finance the building. You know, there's a lot of ways to work with a CPA and a loan officer and your CRE real estate brokers.
I think Jose touched on something that is magical, but we have not go deep enough with it yet. Which, before you were just your business still renting from the owner or they're still paying the rent. But I know we mentioned about depreciation. Can you tell about how depreciation here might change the game to own a property?
Yeah, so I mean, the way depreciation changes the game is that you would think that because you're collecting these rents either from your own business or from another business when you own the commercial building, that you have to pay taxes on it.
Because of your income.
Yeah, well, you do. I mean, any income you have to pay taxes on. Well, the way it works is that since you bought the building and with the land, and not the land itself, but the building itself, you could depreciate it, or you could do the cost segregation study to bring it down from the 39 years of commercial. And what happens there is that on paper, I mean, the building is not collapsing. You're taking care of it, you're doing maintenance of which also is deductible.
Sure.
But you're still acting as if in 39 years, the property is going to be gone, which it's not. But that's what the IRS lets you do. It lets you depreciate the building over 27 and a half years if it's a what's it called? A single family residential, or 39 if it's commercial. And then with the cost segregation, you could bring some of the aspects of the building
Accelerate that
down.
Yeah.
Like probably solar would be one of the cost segregating items. So then what you get there is that you might get a big depreciation expense, let's say $40,000 of depreciation expense. Well, you only collected $35,000 of rent.
Yeah.
So what does that mean? It means that you're making money, you're paying off the debt, you're appreciating the assets. So there's multiple well-building scenarios here, but your profit is, your loss is still going to be in that scenario, $5,000,
Right.
you know. For $35,000 in rental income, but you have $40,000 of depreciation expense.
And how many years can we carry a loss?
Forever, until you sell the property or until you have other other sources of also passive.
Yeah.
It depends. If there's ways to categorize income to make it active income.
Active and passive.
Yeah, but if it's passive, then you pretty much you bunch up all your passive assets, all your single family commercial passive. If you sell one asset over here that had a gain and it was a passive investment, then you can use some of these passive losses to offset that. Yeah, so it's not like it goes away, like you have a loss, you can't take it because of the passive limitations.
Wow.
It sucks. And of course, we want to try to find ways to bypass those passive limitations in a legal way so we could get the deduction and offset it against your W-2 income.
Right.
But at the same time, if you can't do that, it doesn't mean you're going to lose that expense. It just means that it's going to carry over to other passive gains or until you sell that property in the future.
This is great information. All you future investors or current investors, you should talk to Jose Meza about this type of deductions or how to move things around.
Yes, the tax magician. It allows you to keep the money in the pocket while you have a phantom loss, which is not a real loss, but it's on paper. So it looks like you're losing, but you're not paying any taxes for it. So it's a benefit. By this trick alone, it will save you tens of thousands of dollars.
Phantom loss, I like that.
Phantom loss. I mentioned to you last time, right? Any news on the commercial real estate lately?
Yes, actually, for the first time in 3 years, in 2024, there is more retail shops that are closing than opening. One of the companies that are leading the trend is Target and Big Lots. And warehouses, we're still seeing a lot of demand, and we're still seeing a lot of construction, as well as the residential multifamily units.
So we just read in the news, commercial real estate, there are more construction for apartments and multi-unit families. There's residential needs and multi-units, apartments are growing.
And lastly, I want to say, Demarco and Jose, if our clients or prospective clients are interested in using your service, how could they reach you?
Well, I can be reached very simply at my phone number is 951-515-7811, or you can email me at demarco.fletcher@sunrun.com.
Thank you. And Jose?
So to reach me, you could contact me at my phone number. Again, that's 909-279-0009. And if you want to contact me by email, that's jose@mesa.cpa.
Do you have any last word of advice?
Well, thanks for first of all, we really appreciate you guys having us on your show today, both Tom and Simon. It was a great pleasure being here. I hope that I've been able to provide some solar information that's beneficial and of value to your viewers. If anyone is considering solar, if you find that your utility expenses are continuing to go up, and that's only going to continue over the next 4 years, and you want a free, no obligation, no cost consultation, feel free to reach out to me. I'd love to just answer some questions or provide information for you. Just want to add value to your solar experience. One thing I can assure you that if this sounds like something you want to do, I will absolutely guarantee a very easy and efficient and very a great solar experience. That's what I pride myself on, and that's what we'll continue to do.
Thank you.
And Jose, you have any last bit of advice for your clients?
Well, I just want to say thank you for having me. And, I love talking about building wealth, real estate, and taxes. So this is what I do. My last piece of advice is, I want to help all my clients from point A to point B and everything in between. So if they're starting a business and they need formation advice on what's better for taxes, or if they need tax planning advice on what they can invest in to save the most money, please come to me. The best thing about this is that I have partners like you guys, where
Yes.
they say, look, okay, I want to go the commercial real estate route. Then I send them to Tom to buy the property. Then he
Financing
sends you to to get the financing. And then if you want to take advantage of the solar, then we go straight to Demarco. So we have a team to be able to help you succeed from point A to point B in real estate and in just investing in general.
Thank you guys for coming to CRE and More.
Thank you.
Thank you.
Thank
Thank
you.
you.
Thank you very much for watching our new episode of CRE and More, where we are trying to provide you to help you build wealth and save in value. So this time, we are very honored to invite our guest speaker, Demarco Fletcher from King Solar Pros with Sunrun, to help you with your solar needs. And then with Jose Meza, CPA, to help you with your tax savings. And in future, we'll be bringing more our trusted partners along. They're all local business people you can trust, people that we work very closely with to help you build your real estate wealth and help you save. Thank you very much for watching. Until next time, see ya.
See ya.
Yeah.
Okay, before we go, let's take a selfie.
Absolutely.
Let's do it.
3, 2, 1. One more. 3, 2, 1. Okay, great.
Thank
Get a
you.
green dot on my
Excellent.
Awesome, brother. Thank you
you.
guys so much, man. That was awesome.
Thank you.
That's